Welcome to our video report. This is Ramesh Sigamani from Bravisa Temple Tree. This week, we will like to share a proud moment comparing our performance with the Sensex on its last 1 year and 3 year performance numbers. In the last 1 year, Sensex has grown 28.15%. In the same period, our portfolio has managed a growth of 64.82%, which is more than double than what Sensex gave to its investors in the last 1 year period. This has been one of the great achievements for us, as well as the biggest numbers among the diversified portfolio category in the markets today in India. In the last 3 years, Sensex has given an average of 7.05% annualized returns to its investors, while in the same period, our portfolio has managed a whopping 21.72% annualized growth. By being invested into the best of India's businesses and into the right sectors has helped us to achieve such high numbers on our growth performance. So the next question will be, will this growth going to continue? While there are uncertainties in the market, we are pretty much confident that India growth story is highly intact to give a 20+% growth in the next 5 years period. So what are the immediate threats that we have in the market today? The first one is Gujarat election results. Opinion polls are stating that BJP will have a thumping victory in Gujarat, while there are also media reports stating BJP will win, while they will have to face some challenges on their numbers. Keeping the results aside, we don't know what will be the outcome of the results, while the patterns that are getting developed in the market shows that there will be a considerable correction in the market in the weeks following the announcement of Gujarat results. The correction can be fairly large, while we don't expect the correction to be more than 5 or 6%, or probably at the most 10%. Say if Nifty is around 10,500 when the correction begins, it can maximum go down by 1,000 points, form a base there and have a good bounce back, taking the markets to the next rally. The next threat we have is the interest rate hike expected from the US Federal Reserve. This news has already been factored into the prices today in the market, while on the day of announcement we expect a small correction happening, which will also coincide with the Gujarat election results, thereby supporting our view on the corrections in the market. So when we say correction, you need not fear that there will be a big loss. This is going to be an opportunity, as well as the most expected uncertainty in the market today, because in the last 1 year markets have gone up heavily, so we need some sort of a correction, from a base there and move up. So those who are waiting to enter the markets after a correction, this will be a right opportunity for them to get into the Indian markets and be in the journey that is going to be coming up in the next couple of years from now. Treat equities or stock market investment as one more child in your family. If you have a kid and are spending for his or her growth, put equivalent amount of what you spend on the child's growth as your savings, thereby treating that as one more kid in your family. Today, for a kid, from the day it is born to the time it reaches the age of 21, the cost of its growth is estimated at around 54.75 lakhs. By the time your kid is 21 years old and he or she is going to take care of his career, your investments would have grown at 15% growth rate to 2.6 crores. This corpus will help you lead a very good retirement life. We don't know whether your child is going to support you in the retirement period, whereas the savings that you have which is like one more kid that you are keeping aside, will help you have a good regular income so that you need not worry about your child supporting in your retirement period. Thank you. This is Ramesh Sigamani from Brevisa Temple Tree signing off. Have a great day.